Welcome to the deep dive. We're your shortcut to, well, really getting what's going on.
That's the goal.
And this past week, wow, it wasn't just another week in crypto, was it? It felt more like a whole financial era just got fast-forwarded.
It really did. You see the landscape shifting so quickly.
Yeah, moving from, just tech innovation to global policy, big finance, even geopolitics. It's not just code anymore.
Not at all. These are real-world implications now. We're seeing this industry mature maybe faster than it expected.
Right. So in this deep dive, we've sifted through a whole pile of reliable English language sources covering June 16th to the 23rd, 2025.
And we've pulled out the key nuggets, the most important facts, maybe some surprising bits too, just for you.
Our mission, as always, is to cut through all that noise and give you a clear picture.
Concise, impactful, what really matters.
So what are we unpacking? Well, there's this huge regulatory wave coming ashore. The big one is the U.S. Senate passing the Genius Act for stablecoins. Bipartisan, 6830. That's a major milestone.
Huge. Mandating liquid reserves, monthly disclosures. It fundamentally changes things for stablecoins.
And Washington's busy elsewhere, too. House hearings on the Clarity Act, also looking into potential conflicts around Trump family crypto stuff. We'll just lay out what the sources say there. Stay neutral, of course.
Then there's the geopolitical shockwave. That Nobitex hack in Iran, $90 million.
Yeah, reportedly burned, not stolen, burned by hackers tied to an Israeli group as a protest against alleged sanction evasion. That's intense.
Very intense, and adds a whole new dimension.
We'll also look at big money moves. BlackRock taking a, roughly 10% stake in Circle's IPO.
Yeah, boosting Circle and, stablecoins in general, more institutional backing.
And BTCS Inc. upping its Ethereum holdings by over 60%. That's a serious bet on ETH.
Shows confidence beyond just Bitcoin.
Plus, we'll touch on global stuff. Norway banning new crypto mining data centers temporarily for energy reasons.
A big environmental and energy policy move.
TRON going public in the U.S. through a reverse merger, which is an interesting strategy.
Avoiding the standard IPO route.
And just general market things, Bitcoin fees hitting highs for the year, market getting twitchy about options expiry and upcoming FOMC comments.
Lots of moving parts.
Exactly. So stick with us as we unpack what all this means for how digital assets are evolving seemingly faster every day, with regulators trying hard to keep up.
Okay, let's dive in.
All right, that regulatory wave we mentioned. Let's start right at the top. The U.S. Senate, June 17th, they passed the Genius Act, 6830, bipartisan support.
That wide margin is notable in itself.
It really is. And it mandates liquid reserves, monthly disclosure for stablecoin issuers. This feels pretty foundational, right? What's the biggest takeaway for you?
Boy, yeah, foundational is the right word. It's fascinating because, on the surface, it's about making stablecoins safer, more trustworthy, which, frankly, has been needed.
Definitely.
But the deeper implication, the real nugget here, is how this, maybe quietly, maybe not so quietly, sets the stage for stablecoins to become, a core part of the financial plumbing.
Like legitimized.
Exactly. Legitimized for serious institutional use. Think about it. If they meet these standards, they could potentially compete directly with traditional things like short-term debt markets. It's a huge step towards integrating them into the mainstream financial system.
And it's not just stablecoins under the microscope in D.C. The House is holding hearings on other crypto bills, like the Clarity Act. What's that about?
Yeah, Clarity is aimed at providing, clarity on the regulatory status of different digital assets. Trying to figure out what's a security, what's a commodity, the usual questions, but hopefully with clearer answers.
And then there are these probes into potential conflicts involving the Trump family's crypto connections. Again, we're just reporting what's being discussed.
Right. And looking at all this together, Genius, Clarity, the conflict probes, it shows Washington taking a, pretty comprehensive look. Maybe cautious, but definitely broad.
They're not just picking off one issue.
No, they seem to be trying to understand the whole picture. Finance, consumer protection, even the political ethics side of things. The fact that they're scrutinizing potential conflicts of interest shows they recognize crypto's influence goes way beyond just the tech.
Which leads to that classic balancing act, doesn't it?
Right.
How do you regulate enough for safety without stifling the innovation that got us here?
That's the multi-billion-dollar question, isn't it? Finding that balance.
Okay, shifting from regulation to, something much more kinetic. Geopolitics crashing into crypto. This Nobitex hack in Iran. $90 million gone.
And gone is the right word, but the way it happened is what's really striking.
Yeah, the sources say the funds were burned, destroyed, not just stolen for profit, and linked to this Israeli hacking group Predatory Sparrow.
A group known for politically motivated cyber attacks.
And they reportedly said it was a protest against Iran allegedly using crypto to evade sanctions.
This just throws into sharp relief how these digital platforms, which maybe we thought of as somewhat separate financial rails, are absolutely entangled in real-world conflicts.
It's not just code and markets.
Not even close.
Yeah.
This wasn't just cybercrime. It reads like cyber protest or even cyber warfare, depending on your definition. Burning the funds sends a powerful, unambiguous message. It turns a financial attack into a political statement.
It really underscores that crypto exchanges, especially in certain regions, can become targets or tools in these larger geopolitical games.
Absolutely. It adds this incredibly complex layer of risk, touching on national security, sovereignty, things far beyond typical financial regulation.
Wow. Okay, so you have funds literally being destroyed in one corner of the world, and in another you have giants like BlackRock placing huge bets on the space.
Quite the contrast.
It really is. BlackRock taking that roughly 10% stake in Circle's upcoming IPO, that's not insignificant.
No kidding. What's the real signal there, do you think, beyond just institutions are interested? Well, it's a massive vote of confidence, obviously. But I think it's more strategic than just a simple investment. BlackRock isn't just buying into Circle. They seem to be betting that stablecoins, specifically USDC in this case, are going to be fundamental infrastructure.
Like buying the railroad tracks, not just the train ticket.
Yeah, exactly like that. They want to be involved in the core plumbing of future digital transactions. It lends enormous credibility, attracts more institutional money, and just speeds up that whole integration process we talked about.
And we saw another example of institutional confidence with BTCS Inc.
Right, the publicly traded blockchain company.
They boosted their Ethereum holdings by 61%. That's a big jump, from around 9,000 ETH to over 14,500.
Yeah, and that's significant because it highlights institutions looking beyond Bitcoin now. Ethereum, with its smart contracts, DeFi, NFTs, it's seen as having this huge ecosystem potential.
So it's not just digital gold anymore.
No, it's betting on the utility, the network's growth, the innovation happening on Ethereum. A 61% increase isn't just a casual allocation. That's a strong conviction bet on ETH's future. It shows the institutional mindset is maturing, diversifying.
Okay, let's hop over to Europe, Norway. They're putting a temporary ban on new high-energy crypto mining data centers starting autumn 2025.
And the reasoning is explicit. Conserve power, meet climate goals.
This feels different from regulatory frameworks. This is a direct physical intervention based on national resource management.
It is. And it's significant because it directly ties crypto mining's energy footprint to national priorities like climate change and energy security. It's the government basically saying, okay, this activity uses too much power relative to its benefit right now, given our other goals.
Puts the industry on notice, doesn't it?
Absolutely. It forces the industry to confront its energy usage issue head on. And it raises the question, will other countries, especially those facing energy shortages or with ambitious climate targets, do something similar?
Could create a real patchwork map for miners.
Could easily lead to that. Different rules, different energy costs, driving mining operations to specific jurisdictions. It adds another layer of complexity to that global picture.
Meanwhile, back in the corporate strategy world, TRON is taking an interesting route to the U.S. public markets.
Ah, yes, the reverse merger with SRM Entertainment.
For listeners, that's essentially where a private company, like TRON's affiliate, merges with an existing publicly listed company, often a smaller shell, as a faster way to get listed than a traditional IPO.
It's a clever move. It lets them access public capital and gain that listed status potentially much quicker, bypassing some of the intensive scrutiny and time involved in a regular IPO process.
Shows the industry is still innovating on the business side, too, not just the tech side.
Definitely. They're finding creative pathways to fit within or maybe leverage traditional financial structures. It's part of that ongoing dance between the crypto world and established finance.
And just quickly on market mechanics, Bitcoin transaction fees spiked, hitting their highest levels in 2025, around $2.40 per transaction.
Yeah, which sounds small maybe, but it indicates rising demand for block space. More people are using the network and willing to pay a bit more to get their transactions confirmed quickly.
Suggests more activity, maybe more bullishness.
It often correlates with increased on-chain activity. Yeah. Then you had the market jitters around the June 20th options expiry for Bitcoin and ETH.
Right. Options expiry days often bring volatility as traders settle their contracts, those rights to buy or sell at a set price.
Exactly. Big expiries can lead to price swings as positions are closed or rolled over. And this time it coincided with everyone waiting for comments from the FOMC, the Federal Reserve's Policy Committee.
Always market moving, potential hints about interest rates or economic outlook.
Right, so you had this internal market dynamic, the options expiry, combined with this external macroeconomic uncertainty, creates a tense environment for traders.
It really feels like, wrapping this up, the evolution of crypto is just hitting warp speed on all fronts.
Absolutely. You've got the legislative machinery grinding away, geopolitical forces making direct impacts, and huge institutional players placing major bets.
It's being shaped constantly, in real time.
And this week really drove that home. Regulatory frameworks aren't just theoretical anymore. They're actively tightening. You see it with the Genius Act, the ongoing probes in Washington, even Norway's very direct action on mining. It's changing how digital assets have to operate.
And at the same time, traditional finance isn't just watching, it's irrigating. BlackRock's move into Circle, BTCS boosting its ETH. These aren't experiments, they're deep commitments.
Shows a level of perceived maturity, or at least stability, in parts of the ecosystem. But then you have this stark reminder from the Nobitex hack that this space is now tangled up in global conflicts. It's not just about market prices anymore. There are real-world, sometimes dangerous intersections.
Yeah, that adds a whole different kind of risk.
It does.
Yet, even with all this oversight and, frankly, danger, innovation hasn't stopped. You mentioned TRON's market strategy. And we didn't even dive deep into things like, say, SUI partnering with Dubai's regulator, VARA, to boost blockchain development there. The building continues.
That's right. The ecosystem keeps pushing forward, developing new tech, new applications, even as it navigates this increasingly complex external environment.
So for you listening, understanding these different forces, regulation, institutions, geopolitics, ongoing innovation, it's really crucial now. Staying informed means tracking all these threads.
It's definitely not a simple picture anymore. It's dynamic, constantly shifting.
So as we close out, here's something to think about. We see institutions getting deeper in, regulators tightening their grip across the globe. Crypto's evolution is clearly speeding up everywhere. Which raises a pretty fundamental question, doesn't it? What does true decentralization even look like or mean in a world where these powerful, centralized, traditional forces, governments, huge corporations are becoming so deeply involved? Something to mull over.